Yeah.
But brother, I'm going to turn us around a little bit.
Okay.
I'm going to have my folks start asking you questions, and they'll when they have a question, just to they'll introduce themselves.
Yeah.
I know, so you are. So maybe we can start. Maybe we can start with Melissa and asking a question.
Thanks for putting me on the spot there, Corbin.
Nice to meet you.
Nice to meet you. My name's Melissa. I spoke with you last time.
Okay.
About Bitcoins, I believe.
Yeah. Yeah, I remember the Bitcoin conversation.
Mm-hmm.
I think since then Bitcoin has gone up even more.
I guess I would like to, for me, I'm kind of interested in learning more about dividends today because I do have a stock now that pays dividends, and so I've been watching it rise, but I don't.
Which stocks did you buy that pay out a dividend?
I have a Speedway stock, I think.
Yeah, Marathon.
Marathon, yeah.
It's called Speedway?
Or it's Marathon.
Well, no, it's Marathon, and they have I guess you call it Speedway gas stations, whatever.
Mm-hmm.
Okay.
But it's Marathon.
So gas stations, pretty much.
Yeah.
Yes.
Yeah, that's my first stock.
Now they do some also. They also do some what do they call it? Gas exploration type stuff as well.
Okay.
Gas and oil.
Gotcha.
Yeah, so I was just, just interested in how all that works and stuff, dividends, and because I'm watching the stock grow.
Yeah.
I've seen it grow, and that's exciting for me.
So when thinking about dividends, you always want to keep those two separate, because especially when I talk to people, I'm not saying that you're a beginner, but when I talk to somebody who's like new to dividend investing, it's hard to separate the dividend from the growth of the stock. Like you can see the stock go up and down, but always keep those two separate. So the value of the stock can go up and down. Hopefully over a long period of time, the trend will be an upward trend. But then the dividend is something separate. The dividend is separate from the value of the stock, even though those two might influence each other. Right. Usually in the US, dividends get paid quarterly, so every 3 months. But there are companies that pay a monthly dividend. I even have one that pays twice a year, and there's some that pay only like once a year. But in the US, it's usually quarterly. Depending on which company you invest in, some dividend-paying companies, they grow their dividend. So the leaders of the company, the board members, they come together and they discuss if they want to increase or even potentially decrease the price of the dividend that they pay out to their shareholders. The dividend comes out of the net income of the company, which is the earnings of the company. So a company makes, I like using Coca-Cola. Coca-Cola makes billions of dollars in sales, but then they also have expenses. And then the bottom line, what they're left with is their net income. They take their net income, and a portion of that net income is paid out as a dividend to the shareholders. And of course, depending on how many shares there are on the stock market, you want to take whatever they're paying divided by those shares, and that's what you will get when you own those shares, if that makes sense.
Yeah.
Okay. No?
Yeah, so there's a possibility that a company can increase their dividends?
Yes. Now, here's the thing. I like to do fundamental analysis. So fundamental analysis means that you will actually look at the books of the company and look at their numbers. And I like to invest in companies that have been able to grow their dividend year over year. And I like to look at the past performance of a company. So I like to look at least 10 years to see like, okay, has this company been able to grow their dividends year over year? In the past, I used to do it literally by pulling up an Excel file and like, plugging in the numbers. But nowadays I use a website, Guru Focus. I just go to that website, I type in the ticker symbol, and I go to the dividend tab, and I quickly check to see what their dividend growth rate looks like. That gives me a quick understanding of like how the company has been performing from a dividend standpoint in the previous years. Now, past performance is not an indication of future performance, but that's what I do go off of. I do go off of past performance, especially if I look at companies that have some type of competitive advantage, and they have when you look at where they are in compared to the competition, they might be the leaders in their industry. So I do look at a couple of things which will give me a lot more confidence in investing in a company.
So what was the name of that website you'd mentioned?
That's what I was going to ask.
GuruFocus.com. So I just use, I don't pay for information. So if you go to that website, you can sign up, you can sign in, which is what I've done. But there is a membership component to the website. I don't do that. I just use the free version. So if you go to the website, GuruFocus.com, you just type in the ticker symbol, a drop down will pull up. And then I always go to the dividend section. I also go to the 30-year financials, but I go to the dividend section. And if you go there, you'll see some cool graphs that I look at, depending on like the dividend history of the company, their net income, the dividend growth rate. You can see a couple of different metrics that most investors would look at. Everybody's a little bit different, but you get some of the metrics that a lot of investors look at, and it's a graphical chart. So you don't necessarily have to look at numbers. You can look at a chart. Some people like looking at charts a lot more than just looking at numbers. Mm-hmm. And also the dividend payout ratio. You see a couple of different charts that are helpful.
Does a possibility ever exist that a company would just say, we ain't paying out a dividend anymore?
Definitely. I mean, look at what happened in 2008 with the market crash, and look at what happened because of COVID. Disney stopped paying a dividend. The company that you mentioned also, Corbin, was it Ford?
Yes.
Ford stopped paying a dividend.
Yeah, they did.
Usually, if a company is in like a financial hardship, they might cut their dividend, or they might even stop paying a dividend. I try to stay away from those companies. That's why I like to look at the past performance of a company when it comes to how they were paying out the dividends, especially in moments of economic turmoil, like a 2008. Like I go back to 2008 and look at, okay, did the company pay out a dividend? Did they increase the dividend, or did they even like stop paying a dividend? So a company like GE, for example, that's a company from, if you look at their dividend history, it's like all over the place. Whenever something's going on nationally or worldwide, economically, GE always has a hard time like paying out a dividend. So that's like a company that I try to avoid. Even though I'm looking over here and I see my fridge, it's a GE fridge, which is kind of interesting. But yeah, definitely like I look at how companies perform during like economic turmoils and disasters. And I want to see like, okay, were they able to keep paying an increasing dividend? Disney kind of surprised me because I had high hopes for Disney, but because they stopped paying a dividend, I actually sold all my Disney stocks. But on average, all the companies that I invest, I only had to sell one company which was Disney, but all the other companies that I had, they still paid an increasing dividend, even during when COVID happened in like mid-March, when it got real heavy.
What's the advantage, if any, for a company to pay a dividend?
So I look at it as the investors. The company is pretty much, if a shareholder invests in a company, the company wants to. It's a thank you to the shareholders. So you, as an investor, you believe in the company, and in turn, the company pays out a dividend. But here's the cool thing. Well, depending on how you look at it, a lot of people and upper managers, they also work at a company. And if they perform well, so for example, take Pepsi. I don't know who the CEO of Pepsi is now because it used to be Indra, the lady from India, but she retired. But the CEOs of the company and even upper management, they own shares in the company. So it's in their benefit that the company also does well. So if a company is able to increase production, increase performance, pay out a higher dividend, that also filters down to them. So there's two ways of looking at it. It's looking at it from a shareholder standpoint, like when a company went through an initial public offering, the company gathered a lot of cash flow money in order to fund their business. In turn, they thank the shareholders by paying out a dividend, but then also from a CEO and upper management level, meaning that if the company performs well and they get like a package of shares, if the company performs well, it also benefits them.
You know, brother, one of your books, you put out several, obviously, as you know, but the one I absolutely love, the first one I read was Smart Investors Keep It Simple.
Yeah, that's my favorite.
Subtitle, Creating Passive Income with Dividend Stocks. I got several questions. The first one is, what is passive income?
So passive income, so you have earned income and you have a couple of different ways of looking at it, but just to earned income and passive income. Earned income is income that you literally have to work for. So let's say you work in a grocery store, you have to do physical labor in order to earn your income. Passive income is income that you generate, but you don't necessarily have to work for it. So for example, you do the hard work up front, and once the hard work is done, you get paid passively. Meaning that, think about it like dividend paying stocks. You do the hard work up front by analyzing a company, buying the shares, and then you make money passively. Like you don't have to physically do anything because the dividends every quarter, they get deposited into your brokerage account. Another example with my books. So I make royalties with my books. So I put the hard work up. I put up the hard work on the front end by writing the book, editing it, proofreading it, coming up with a cover design. And then once I publish it, it makes me money passively. I don't have to physically do anything. So I can actually do a job. I can do whatever I want. And then on a daily basis, I just log into my different accounts and I check to see how many books I've sold. So earned income. Mm-hmm.
And you know what fascinates me about passive income, that's really something that you can create for yourself at any age. Would you agree with that?
Yes, definitely. As long as you have some type of knowledge or skill, you can leverage that and try to put it in a format that will make you passive income. So if you think about passive income, dividend stocks, real estate in the form of income properties, royalties, book sales. Even think about musicians, rappers, R&B singers, pop stars. They make their music, but then they make passive income from their music. So they might have MP3 sales, CD sales, Spotify downloads. So there's a couple of different ways that you can make passive income.
Mm-hmm. You know, right here in our group, we have a young man, Stephen, and, you know, he's a teenager.
Yep.
And I'm thinking, you know, it's like, wow, you know, if Stephen really studied, you know, he does a lot of reading on the stock market and dividend companies. And then let's say he's able, maybe through his family, to say, hey, let's put our money into these companies that are paying dividends. You know, a few years down the road, 5, 6, maybe 10 years down the road, but a few years down the road, he could actually be having income from that.
Yes. I mean, with dividends, you'll get income somewhat immediately. So whenever you hit that that pay date, you'll get that money, that dividend